With economies in the major developed countries having been laid low by financial speculation, fraud, and excessive leverage by the banksters, resulting in continuing massive Keynesian waste, investors are desperate for yield. Looking around the world, where can investors flee that Keynesian waste to fund some good old Schumpeterian waste? Where are the opportunities for the global investor? Where are those future monopoly rents we all seek? Mexico, China, India, Brazil, and what are the risks and challenges in these markets? We have a great panels. I'm not going to read their bios. Read them yourselves. Gary Rieschel, currently living in the heart of the beast, Shanghai. Ricardo Salinas, one of Mexico's leading entrepreneurs whose talents extend far beyond that country. Christie Simons, who in Deloitte's Silicon Valley office, serving global technology clients, and Kamran, Elahian, who needs no introduction for SNS veterans. I'm going to start with you, Ricardo. Where do you see the opportunities for a global investor? Where are you investing? How are you making money?
Well, I think we have to look at the overall trend and what's happening in the U.S. in terms of the QE1, QE2 is going to have tremendous effects all over the world, in our opinion. So we're very much interested in hard assets, commodities, real things that will not lose their value. And we're very much away from things like long-term bonds and so forth. And that's a general picture, all right? And around that, we try to get into industries that will do well when things come to pass. See, I have a particular experience in my country, in Mexico. We went through something very similar. We used to have a very sound money in the 40s, 50s, 60s. And then towards the beginning of the 80s, the government started on a huge spending spree and taking on huge debt load. Sounds familiar? You want to see the rest of the story, just look at the history.
Are you bullish on Mexico?
Well, yes, but you have to, again, in this context, not everybody's going to do all right.
I lived in Japan in the 80s, in Seattle in the 90s. I love bubbles. Yes. Is there a commodity bubble? Are you concerned about that?
Well, of course, you have things like silver, you know, in the past week or so, two or 3 weeks, it's corrected like 30, 40%. So it's pretty, you know, nerve-wracking to sit on a position when that's happening. But if you look at the long-term trend, it's clearly intact.
Now, you're also in banking as well, right?
Yes, we are.
Did the Mexican banking system take a hit from the implosion of this last bubble?
No, because we already took a hit in '94. You know? So again, Mexico is like a precursor of what's going to happen. Borrowing short, and then lending long. It's a very bad idea. It's like they say, picking up nickels in front of a steamroller. You know, and that's the typical way that most banks make their money. And we have a different bank. We're in microfinance, very small loans, and millions of customers. We have 20 million credit customers.
Are there opportunities for an individual investor to get into Mexico and take advantage of the opportunities there?
Yes, as always. There's the stock market, of course, and then there's actually buying a company, running a company. There's lots of opportunities. But I would suggest that investors who go to Mexico pick a good partner who knows how to move around.
Gary, as I said, you're really in the heart of the beast. Is that the next bubble? Is that the one we should be chasing?
Well, you pay us to find bubbles, right? I mean, because I don't think anyone in this room's ever made a lot of money if there wasn't a bubble. And the question on bubbles is, are they elastic? And are you getting in relatively early? And so VCs, hopefully we find things that are relatively early. We invest in large markets, and we get out before the thing collapses. I mean, that's, you know, the LPs don't like to necessarily hear that, but that's the reality of the venture capital business. One of the things now, and fundamentally I think if you want to have outsized returns, you have to go where you're going to be inconvenienced. And I mean that very, very sincerely. All the easy deals are done. All the easy countries are done. So if you want to make a lot of money now, you go to Africa, you go to Latin America, you go to Southeast Asia. places where it's very predictable what the infrastructure is going to be. They're going to build it out. They're supporting 200 million people in Indonesia, a billion people in Africa, a billion people in India, lots of people in China. We've talked about China quite a bit. So what you want to do is, if you have a lot of guts, you play the infrastructure side. And then you wind up investing in a dam project that actually never either blocked any water, generated any hydro, or it's a complete ecological disaster. The safe thing to do, very predictable. What services is that infrastructure going to enable? That's where a lot of the money is being made in China. What kind of services does the high-speed rail, does the hydro infrastructure, does the grid infrastructure, does the internet, what does that enable? And I think that those are the really big investment themes in terms of relatively safe areas. You have to find the right partners. But in terms of the big investment themes and categories, those would be things that I would look at.
You look at Seattle's history, the money that was made in the Yukon Gold Rush was made in Seattle, selling the shovels and wheelbarrows. The California Gold Rush, the money was made in San Francisco by Levi Strauss and others.
Well, what's happening in China, specifically about that, and what we've been investing in are things that take advantage of all these different infrastructures that they're building. So if you imagine China today, where else in the world you can invest as if you're investing in the 1880 railroad infrastructure in the U.S. because they're building out the railroad infrastructure, the 50s highway infrastructure in the U.S. because they're building out the highway infrastructure, the telecom boom, the reconstruction of the Japanese economy, the equivalent is all going on in China at the same time, and oh, by the way, the internet. So if you take those 5 things together, that's effectively the investment base that you have to play with in China today.
Are there ways for, the same question I asked Ricardo, for the individual investor to take advantage of those opportunities?
Well, I think that in trading the Chinese stocks, I think a lot of the folks probably in this room have been watching what's happening on NASDAQ and the overseas listings. If you played the commodity stocks, that's a big part of the China story, and I think those are up 4x in the last 18, 24 months. A lot of the Chinese internet stocks, Baidu's up 4x, Sina's up 5x. So I think a lot of those stories have started to play out. So the individual investors can do that. In terms of the traditional hedge funds playing the Chinese stock market, you can't because it's a closed market. The RMB is not convertible, so there's a lot of places you can't access the market. Hong Kong's a nice proxy. The Singapore and Hong Kong market have quite a bit of play now, a lot of China dependency in a number of their entities.
So are you saying rather than invest directly through the Chinese stock market, you'd be more inclined to invest in companies that are exploiting opportunities in China?
Well, it's all a question of your risk profile. Purely domestic Chinese companies, even if they're listed in Hong Kong, the financials are emerging. And so emerging markets means emerging markets. And I think, I'll let Christie comment, but put it this way, we have had to reconstruct a large number of the financial statements that we've invested in. And so I think the safest play are multinationals that have a huge dependency or a huge play, very predictable, transparent play in China. That's a safe bet, and I think that bet still has a lot of room to run.
Picking up on Bill Janeway's reference to Keynes earlier, one of the lessons that Keynes taught, I think, was as an investor, you're not just concerned with the fundamentals of the market, but you're also concerned with what other investors are thinking and where they're going, sort of the first derivative. So in this case, it might be, where is China going? Is the global expansion of Chinese firms, for example, to lock up commodities or whatever, does that create opportunities in those countries?
Well, that goes back to the first statement. So China's building out the Indonesian rail and highway infrastructure. They're building out a lot of the African infrastructure. So if you follow where the Chinese construction companies are deploying tens of thousands of Chinese or hiring tens of thousands of locals, what you can predict is there will be a road, it will be carrying goods, it probably carries commodities. Someone's paying on both ends of that road for both the mining operations and the goods coming out the other end. So I actually think if you watch those kind of infrastructure projects, those are relatively safe investments. Because you do have several billion people in the world that have access to virtually nothing that we take for granted. And they want that. And it just turns out that right now China's in the position where they're underwriting both with technology, people, and finance the development of that.
Kamran, you've created your share of Schumpeterian waste, but have generated far more monopoly rents to make up for it. What's got you excited these days?
Well, I guess before I answer that, I want to mention I'm not that smart, so I don't understand much of economics. And I have a partner who is very smart, and he's an economist. And I never forget, speaking of, I guess, market principles and intrinsic values. Through my investments in Sequoia Capital, I had some shares of Google, so I went to him and said, Vijay, I don't understand stock market. I never buy or sell anything. Tell me, what should I do? On the IPO, he said, should I sell any of my shares when distributions are made? And he said, oh, it's absolutely overvalued. It does not meet the principles, and goes through very, very detailed analysis and shows me the things. And he's so smart. As soon as I got the first distribution, and Sequoia made 10 distributions, each time 10%. I can't remember, it was 100 something. I ran out there and sold it. And then next distribution came, the price had gone up another 20, 30, 40%. I went to him, he made the same analysis, I sold it again. Tells you how smart I am. I kept following his advice. Each time it had gone up from something like starting $100 at $500. He kept selling, he kept telling me, sell it, and sell it. So I still don't understand how market economics work or whatever. But
so that's why you're here and not your partner. So
the thing I know a little bit about is high technology investments and how to go and create technology value. That's something that has some intrinsic meaning to me, and I put, I guess, my eggs in a basket that I have a little bit of understanding. And within high-tech investments, the last year and this year are good years. After so many years of investment and putting money in our companies, and our Global Venture Capital Fund has investments in US, Japan, China, India, and Israel. And it gets kind of tough. You go and tell your investors, well, be patient, one more quarter, one more year, one more year. Thank God, finally, last year we had a couple exits, and this year it looks like another couple will come. Where we see the opportunities definitely is the communication field is just growing amazing, and mobility have been growing amazing all across the planet. And these have been the two basic themes that I have personally followed from my social values, that you develop technologies that bring people closer together, and use these as ways to create more peace and harmony within the planet. So based on this, I do see, there's no end. It just keeps getting better and better. If I had to make comparisons within United States, the semiconductor industry has completely disappeared. If you look at the number of chip companies that were created, who were establishing real deep values in the last 5 years, that has all gone to to China. I would have a tough time counting in the last 5 years if 50 chip companies have been created in US. I would say within the same period, over 700 of them were created in China, for obvious reasons that some of that Mark talked about. The lack of, payment of intellectual property to design automation companies makes it much cheaper to start a company in China and not pay licensing fees to design automation companies like Mentor or Cadence or any of those. And the cost of labor being lower, and it's easier to copy a lot of that. US has really changed investment to more social networking, and the business model of venture capital has changed quite a bit to people spreading their risk, putting small money into many different similar low technology, typically, investments, and then a few months later come and see which one of them have survived and give them more money. In China, we have a couple investments which are big technology value into them, and one of them is doing amazingly well. But most of the investments we saw in China were really, as Gary said, infrastructure related, and we have no expertise on investing in hotels or coffee shops or many good investments that have produced great results, but we just don't understand it. India has been interesting, and I would refer to them as third generation of entrepreneurs, have started to look into developing products that has understanding of the market rather than just being an outsourcing service.
Focused more on their own internal market?
Yeah, because a new internal market has been created, and India has got a pretty good size middle class now, and it's a lot of opportunities for the middle of pyramid, and even the lower levels of pyramid are emerging. Some very interesting companies there. Israel is a trove of new technologies, but the venture capital has been really hit in Israel. Very few investments are being made, and if one has the interest, should go and look at them, because there are a lot of good technology deals, deep technology deals there. And Japan, unfortunately, has really been hit hard. I was there about 4 or 5 months ago, and it was really sad. It really is how you see air of despair, I guess, within covering the whole country.
Mm-hmm. Christie, you advise global clients. Mm-hmm. What are you advising them? What are the risks and dangers and pitfalls as well as the opportunities?
Quite a few, actually, but just to maybe go back to what we're seeing in investing, specifically in China, is also, in addition to the infrastructure and probably what, from a more technology aspect, and I totally agree, semiconductor has kind of been there, done that, but clean tech. Solar, we're seeing a lot of activity in solar, and there's a lot of competitive issues because of the government support of the solar companies in China. But how do we work more closely with those China companies? The environment is a global issue. It's not just a China issue or a U.S. issue. So we are seeing a lot of investment of companies here really trying to work with China companies, not only in solar, but also wind, biofuels, also life sciences. Given the aging population of China, there's a lot of opportunity there. China doesn't necessarily have their own technology, so to speak, around pharmaceuticals, and that's something that is a lot more difficult to copy from an intellectual property aspect. So how can we work with them and also recover some returns on that aspect as the government ages and they have to deal with an aging population? I do think that from a social infrastructure and the whole urbanization that's going to be happening over the next 5 years for China's, quote, 5-year plan that starts this year, that they will continue to have those infrastructure build out, but also trying to create a little bit more level playing field with the wealth distribution and what kind of resources around education. We're seeing some investments in really trying to help with the education from an internet aspect and tutor, because they do have such a high value on education, across the country. So those are some of the investments that we're seeing. As far as challenges, I think everybody is pretty aware of some of the challenges. Gary, you mentioned emerging financials. I do think that's definitely an issue, and I think part of it is just the level of sophistication. You're kind of dealing with a teenager, I think, in China, right? I mean, they've grown so fast, and they've grown leaps and bounds. They've been able to leapfrog a lot of the things that we did as a developing country, 200, 100 years ago. There was a slower progression to where we could become more sophisticated and figure out what the quote Western business values are. China, has been a closed society for so long that all of a sudden now they're exposed to all of this, and what are the norms that I think that they've got to learn as far as business practices. So intellectual property, absolutely one of them. Foreign Corrupt Practices Act. We have a significant business in helping companies deal with FCPA and the controls around that, especially going to China and some of these other developing countries where the government owns a lot of the businesses. So just by virtue of selling into a customer, it's more than likely owned by the government. Well, in China, culturally, giving gifts is very much the norm of how they've done business for, hundreds of years. So now all of a sudden you go in there and you say, oh, we've got this U.S. rule, you can't do that because it's unfair disadvantage. And that creates a bit of a challenge. For example, I have a client that just went through, they had acquired a government-owned entity in 2006, had a 70% joint venture. In late 2007, they identified that there were maybe some unusual gift-giving practices to government officials. So their audit committee launched an investigation. It is a public company, so it was registered with the SEC. The audit committee launched an investigation. They identified that, yes, there are issues, and so they self-reported to the SEC. They literally just settled last fall. And ultimately, as part of putting in the controls to the sales force then didn't really know how to sell, right? They're used to selling. Their competitors are giving gifts that aren't owned by a U.S. company, that don't necessarily have the same guidelines that they have to follow. So they were almost paralyzed, and you could see it in the sales, you could see it in the entity. And ultimately, the company, the U.S. company, basically said, we just have to give up. And they sold the subsidiary.
Wait, Ricardo, I saw you react to that. Because in Latin America, obviously corruption, transparency are also issues.
But it's this very American view of the world,
Right,
It's like
right.
the trilingual, the bilingual, and the American. They just speak one language. I mean, the world
And
is
it's
not
necessarily
like one
correct.
would like it to be. The
Right.
world is what it is.
Right.
And if you're going to go somewhere else, you better adapt, or something's going to happen. So it's almost, quaint, that view that these kinds of rules will be applied everywhere.
I guess what we are trying to do is to get all the corporations to follow our practices in here. They need to create the lobbies, and the lobbies, instead of giving gifts to the politician, directly, they go and give the money to the Congress,
Sure.
so the Congress comes and passes the right laws on that. I
The
guess
third
How do you
world.
go about it, right?
we need to manage the corruption properly, I guess. The American side.
Exactly right. We need some transfer of technology, how to corrupt in the correct way.
Right. Well, and that's, adapting yourself, right, as opposed to adapt yourself to the culture.
Yeah.
But being able to understand the culture, from a Western view, it is so different. After living there for 3.5, 4 years, it is very different in how they think about doing business and how they do business. And if you can understand that, then I think you can probably help adapt to that a little bit better.
If I can switch from the corruption side to innovation, which one of the other things that we take too much comfort in sitting in this room or sitting in the United States is because when you look around the world today and say, well, where is a lot of innovation occurring? And you look at the current test cases, and I think with Kamran, you see some very innovative products in Israel. You see some in China, some in Japan, some in India, but really the majority of the great innovations have still come from the United States. That's going to end. And that's going to end much faster in a much more sudden way than you think. Because the thing that Bill Janeway said this morning, which is really important, is certain kinds of research, you can't measure the outcome. It's simply putting money at things and iterating again and again and again and again. And what I'd submit to all of you is that innovation requires a couple things. It requires capital and it requires bright people, but it also requires need. You need something. That's why people innovate, because you have to change things, you have to do something in a new way. How many people in this room really need anything? What do you wake up in the morning saying, I need? People in China wake up, people in India and Africa, I need water, I need food, I need clothing, I need education, I need healthcare. That causes really dramatic behavioral shifts. And the amount of money that's now, the liquidity that's moving around the world, the Middle East is pulling out of Europe. All the Middle Eastern money is pulling out of Europe and the United States. And it's all trying to figure out how does it play Africa, how does it play other emerging markets. You're talking hundreds of billions of dollars over the next few decades. So I think that the comfort here, you're not going to see the innovation until you see 1,000 of them all of a sudden appear, because it's not something that's predictable. But it is going to come from countries and environments where there's need, there's people, and there's capital. And the people and capital are readily available now everywhere in the world. It's the need that we're missing here. And I think that drives far more than we'd like to admit.
Ricardo, talking about sort of cultural barriers, despite the proximity of Latin America to American investors, it seems to be neglected that people investors in this country are afraid to invest in Latin America. But it has survived the Great Recession relatively intact, and some of the economies are doing quite well. Where in Latin America are you investing?
Well, Latin America is a very big place.
Yeah.
The problem is it's partitioned off into small countries. For example, we operate in 7 countries, but most of them are very tiny, like Guatemala, Honduras, El Salvador, Panama, and there's Costa Rica. We also run Peru, which is doing very well. Colombia is exploding, by the way. And what to say of Brazil? Brazil is a continent and a destination in itself. It's doing great. Argentina, lots of consumption, but the regulatory environment is kind of iffy. And Chile, of course, has been a star. So Latin America is a pretty big place, and Brazil has taken the spotlight for quite a while. Mexico is doing the same as the U.S. It goes up and down with the U.S. So there's lots of opportunities. Again, I fairly appreciate what you said about the need. There's so many things that need to be done.
Yep.
That there's ample opportunity. We were talking about entrepreneurship the other day, and that's why we have millions of entrepreneurs, because there's so many things that need to be done.
I knew it was hopeless to try to cram these 4 people into a half an hour. We have 3 minutes left. We certainly have no trouble sustaining a conversation here, but if people have questions, I want to open it up now for anybody who wants to take that shot. Gary, you were in Seattle for the bubble years. Now you're in China. Are you looking now?
Okay,
on to
so
the
here's
next
the good news and the bad news. So I was in Japan from '88 to '93. So I was in Japan 3 years after I arrived. Everything collapsed. I was in Silicon Valley from '93 to 2004. 7 years after I arrived, everything collapsed. I've been in China 7 years.
Oh.
And there's a bubble.
So one
And we
would
believe
start
there's
to
a
wonder
bubble.
if it's time to run for the exits. I like starting things, and so I've started, and there's no interest starting things where things are slow and boring, so you go places where things are exciting. But I would echo what we were just talking about regarding some of the places that we're most excited. Obviously, we're excited in China, and we have a large investment team there. But I think Latin America is one of the great opportunities. And I think Africa, if you run it straight line over 20 years, outperforms virtually any other market in the world, if you take Africa as an entity. Obviously, you can't treat all parts of Africa equally, but I'd be hugely optimistic about where Africa winds up in the next 2 decades.
It seems like that's a situation where you want to invest in firms that know how to invest in those countries.
And what I would add to exactly what Gary said, because of the internet, because of diffusion of high technology, there are a lot of very interesting, amazing entrepreneurs that are emerging from Latin America, from Africa, from Middle East, and
even China, because there's a wealth
absolutely,
creation.
right.
There's a lot of wealth creation happening in China where they're doing a lot of investments too. There's like 1 million millionaires, which are average age of about 39 years old. So, there's entrepreneurs created everywhere. So.
But just coming back to this point about the regulation, there's a very old saying that says, when in Rome, do as the Romans do.
Right.
I would say, when in a local environment, you have to do the way they do it. And
Absolutely.
I think that's a really big challenge for U.S. corporations, for reporting corporations.
Yeah, I would agree.
And there's a note today in the paper saying that listings in the U.S. are down by 42% compared to an explosion, of 100 and something for European listings. Why would that be? Regulation.
I guess I would tend to be disagreeing with Ricardo on this a little bit, quite a bit. From while I was talking about, and I do believe we have a sick, I guess, political system, but by any means, having lived in a few different countries, U.S. is the best place to live, and I definitely want to have regulations that govern a lot of these things, because I've had friends. I was born in Iran. I've had friends who, have gone back out of patriotism to Iran, to India, to China, to many of the countries. And if you taste the basics of meritocracy, that when you live in US, if you work hard, you're smart enough, you do the right kinds of things, good things happen to you. When you leave that and go back to some of the traditional countries and you find out all of a sudden that your boss is half as competent as you or a fraction as competent as you, and is just a political appointee or a nepotism because of the things, it really pisses you off. And
well, I wouldn't support that at all, Kamran. We're not talking about that. But
we'll have to end on that note. Thank you, everybody.